Yeah, thank you very much for the introduction and for inviting to speak to this conference. As my title shows, I am a diplomat now. I work as a diplomat, even though a trade diplomat, so maybe a little bit more straightforward than a normal diplomat. And in addition, I'm a Bocconi alumnus, and I studied international economy. So I think I thought I can start with my presentation going straight to the point. The bottom line is, what are the aims of the trade policy is to boost growth and jobs. So, of course, there are many other considerations behind this. We can always discuss about how to foster development in the poorer countries, how we project the EU values around the world, but I think that's, for me, the bottom line of our trade policy. And in particular, I think trade is a powerful engine for growth, in particular in a period where we don't have to draw on public finance. I mean, as we have seen before, we have a serious problem in Europe on public finances, and the fact that we can foster growth without injecting additional money in the economy is something that is very much important, especially if you see that the external demand is for the moment one of the most robust source of growth, and also the future sees that 90% of the growth, of the world growth, will come outside Europe. So it's, again, even more important to tap on this source of growth. This slide is just to show, in particular for the deficit country in Europe, how important is the export growth for them. So again, the trade as an engine to solve the European problem. Another important feature of trade, in particular trade opening, is that it can also foster structural reforms. The competition and the innovation comes from trade, come from trade openness, and this is translated also in increase in productivity. Therefore, we can see that as our economy in Europe growth depends on the world growth, we need to connect to these growth centers, especially here in Asia and in Southeast Asia. This picture shows how important it is for each individual member state trade in terms of employment, especially for countries in the north part of Europe, but also in the southern part of Europe. Employment is very much related to the export sector. Against this picture, anyway, EU still remain an important trading power. In 2011, we covered around 15% of world trade. We are the first exporter and the largest importer, and also one of the largest receivers in terms of FTA. In terms of trade, Europe is very much important for third countries. In this other world map, there is no Asia in the center, but there is very much a lot of blue color, which is the color representing the countries where the EU is the first trade partner. So the fact that EU is the largest economy in the world is also very much important for third countries, and therefore this trade openness is something which is very much reciprocal. In terms of performance in the last decades, I think we have done pretty much well, especially if you compare to our main competitors, US and Japan, in terms of maintaining the market share. Of course, there is a strong growth of China, which is obvious, but in terms of performance, we can be relatively satisfied, both in terms of merchandise trade and also in shares on the global service trade. Of course, maintaining market share is very important, but we have also taken in consideration the evolution of the global supply chains. It's not anymore important, the surplus of the deficits is not anymore a good indication of the trade performance. We import a lot, of course. We import mostly raw material and component to export our product. we have very much importance of services in the final goods and the final value added of the export. So we cannot use the common tool of measurement of trade flows as a clear, at least as an only indicator for our trade policy, but we have to go and see where the value added is coming from. And I just wanted to give, a couple of examples of this. The example of the German automobile industry, where the value added input, foreign input increased substantially between 1995 and 2008, but still the jobs are still growing in the industry, in that industry. So it means that there is no, let's say, contraposition between getting import, foreign input and creating jobs. The example of the iPhone, probably everybody knows, is designed in California, manufactured in China, but there's still 12% of EU value added on it. And then as we are close to Indonesia, maybe not everybody knows that some parts of the Airbus are done in Bandung by Indonesian companies. So these are all elements that we have to take in account when we design our trade policy. What are the answers that we try to give to these global supply chain issues? Of course, we have to look where the value added is actually produced, rather than where the goods come from. Of course, we have to open as much as possible trade in both goods and services areas. We have to be more effective in protecting IPR. This is something very valuable for our companies, the intellectual property, so we have to be stronger in this protection. And also, from the, let's say, more academic, economic point of view, use different tools that simple trade statistics, and in particular, there is a new EU-sponsored database called World Input-Output Database that shows where the added value comes from and not where the goods come from. So against this background, I think we can talk about our trade agenda. Quickly, background of the three pillars of the EU trade policy. Of course, we consider the multilateral system as the best approach, also because it avoids trade distortions. And the EU FTAs that has been done in the past were also motivated by development and other policies objectives. We then moved to some regional bilateral negotiation, mainly need to overcome the impasse that we have in the WTO and try to ensure a level playing field. And then, of course, we still have the unilateral liberalization. We still take care of the needs of the developing countries through the GSP, the General System of Preferences, that we give to developing countries. Especially in this field, in this, let's say, movement between the multilateral approach only that was designed at the time of Pascal Lamy, when Pascal Lamy was Trade Commissioner, where there were no new bilateral negotiation. We had a shift in 2006 through the communication of the Commission called Global Europe, while keeping the WTO as still a priority. We have to take into account of the new global development, and therefore we have to move towards this new wave of very ambitious FTA. And we started with the areas of the world where the growth is particularly strong, South Korea, India, and ASEAN. As I said, the main reason was to overcome the impasse in the Doha round, and we need to make sure that our companies, European companies, were not, let's say, left behind in the waves of regional and bilateral agreements that are, let's say, developing around the world in the last decade. This is again another picture of the network of EU preferential agreements, covering pretty much the world, if we exclude basically China, Russia and the Australia and New Zealand. Most of the other part of the world, we have already some kind of negotiation or in place or ongoing. In terms of coverage of this bilateral trade strategy, the applied FTA so far cover around 1/4 of the total EU trade. Then we have another, let's say, 20% between the concluded but not applied and the one that we are still negotiating. And then we have another possible FTA. So basically, there is no plan only on around 1/3 of the EU trade. Coming to the region, of course, ASEAN is one natural partner for the EU, both in terms of numbers, on statistics, in terms of the presence in trade presence, but also investment presence of Europe, and also because ASEAN is one of the regions where there is this regional integration going on, which is something that is very much, let's say, supported by the EU, being the European Union one of probably the largest example of regional integration in the world. We are very much interested in getting in closer contact with other areas that are doing the same. There is also, of course, as I said at the beginning, the importance to be where the growth is. In this part of the region, we have a relatively high growth, of around 5% in the last couple of years. So we need to be there. And we need to be there also because there are still relatively high tariff and non-tariff barriers for our companies. And of course, we studied this from the macroeconomic point of view, and we see that actually the results are there, 4.4 billion per annum for a regional FTA in terms of increase of GDP. Of course, there are also, as I mentioned, regional dynamics going on. There is the ASEAN Economic Community that will be hopefully at least advanced next year in 2015. They are currently negotiating with the partner in the region, with the American on the TPPs, and also, of course, the presence of China in the region is very much felt. What we propose in terms of new FTAs, as I said, the EU approach is to go for a deep and comprehensive agreement. We are not interested only on removing tariff and non-tariff barrier, but we want to expand on the services, increase market access in service and establishment, and also negotiate what we call the rules. So basically protection of intellectual property, public procurement, competition, and also capital movement and payment. So for the ASEAN, we started in 2007 after the Vision Group report was published, and we had several rounds of negotiation, actually 7. Unfortunately, in March 2009, we had to agree on a suspension of this regional negotiation due to the fact that basically the divergence within ASEAN were too important in order that could not allow the whole region to negotiate at the level of ambition that is requested by the EU. Therefore, we started a bilateral approach, negotiating with the countries that are ready to do it. Singapore, of course, being very open already, it was the first one and also the first one to conclude the negotiation, and now we have an agreement currently in ratification, as I will show later. We have ongoing negotiation with Malaysia, Vietnam, and Thailand, and we have a strong interest from other partners in the region. Coming to Singapore, of course, the numbers are there. The largest trading partner in Southeast Asia, strong growth of our trade, and of course also vice versa, importance of the EU for Singapore. The negotiation for the one that maybe they are not from here started in 2009 and went through this different period until December last year, when politically the agreement was concluded, and then we had some technical scrubbing and initially with the objective to sign the agreement next year and hopefully have it into force before the end of next year. Quickly, to go through what is the content of this agreement. Of course, we still talk about duties, even though are less and less important for our companies. There will be a complete liberalization of the duties that Singaporean companies are paying within 5 years. With 84% of the export of Singapore that will be duty-free at the entry into force. Of course, this is benefiting Singaporean company, but also European that are manufacturing in Singapore, and they can also benefit of relaxed rule of origin, which will include also regional accumulation, which is an important element, I think, for around 80 products that can source in the region and then export duty-free from Singapore to Europe. We have also, of course, liberalization in services, which is the growing part of our foreign trade in areas such as telecommunication, financial services, which is very much important here in Singapore, environmental services, engineering and architectural services, etc. So there are many areas where European companies are very competitive and they can really, let's say, increase their presence in Singapore and in the region. We have also discipline for non-discrimination and transparency, and also protection of investment, which is currently negotiated. Public procurement, that's very much important, is one of the pillars of the new trade policy of the EU, try to tap on this area. In Singapore, we obtain quite a lot with additional procurement entities that will be available for which the European company they can bid, additional services and also lower threshold. So that's, I think, something that is also interesting for European exporters. And the last bit that I wanted to say on the FTA, we have also enhanced protection of intellectual property rights for mainly European, Italian and French and other exporters of geographical indication, enhanced protection of the geographical indication, where we have a substantial economic interest, and also other increased protection of copyrights, and also strong enforcement rule. Finally, as a novelty, this is the first green FTA in the sense that there is a chapter dealing with both goods, services, and investment in environmentally friendly goods and technologies. And this is something that is, I think, pretty much a new thing for the EU to go in this area. Finally, I just wanted to make a little bit of publicity to an economic report, an economic assessment of the agreement that has been published by the DigiTrade chief economist. Is based on a general equilibrium model and shows the advantages of this FTA at the macroeconomic level over a 10-year period. Of course, the numbers are by nature not that huge. Singapore is already open and also is a very small economy compared to the European one, but still we can see some interesting numbers coming from that, and anything that in this moment can help to increase the growth in Europe, I think, is welcome. And anyway, this is very much a conservative estimate because, as you know, this general equilibrium model, they cannot capture issues like the non-tariff barrier and all other provision, public procurement provision that we have in the agreement. So it's very much the minimum that we can consider. This was the conclusion of the agreement, of the economic studies, where there is, of course, an impact, even though not that big for Europe, definitely more important for Singapore. And then maybe the last point, the insurance effect, I think is very much interesting to keep in account. By the way of the agreement, we lock in the openness of Singapore to European companies, and there cannot be any future closure of the market, as maybe, of course, now seems not very realistic, but can happen maybe in the future. And also the second other element that is not, unfortunately, quantified in the study, but I think is very important to mention. This agreement will be a kind of reference agreement for the region, and if we can replicate at least some of this provision with countries like Indonesia, Thailand, Malaysia, definitely the companies will be benefiting from that.